Coach Matt Justice here for Tackle Trading, continuing our series on learning how to trade currencies in the Forex Trading 101 series I put out there that includes both the Forex report and these Forex videos on strategies, as well as the blog post I also put out there as well. And we're going to just do even more of it over the course of the next few weeks. It's very important that we understand how to trade currencies, number one. I was told by my Forex mentor one time, this is back 4 years ago, that I was only trading options at the time. I liked trading options, buying and selling options, theta, vega, delta trading and whatnot. But I was told that by my Forex mentor that if I didn't understand how to trade currencies and trade in the Forex market, it wouldn't matter in 10, 15 years how much money I would make, because I wouldn't know how to protect the value of that money because of what is happening with the reserve system and kind of the reserve system changing from the US dollar to something else, and we can talk about that at a later date in time as well. Well, anyways, in terms of that, I find it's very important to get the good word of trading currencies out there in the marketplace, and I want currencies to be a part of every single person's at Tackle Trading, all of our teammates. I want to be a part of your system as well, and it doesn't mean you have to trade in the currency market. Understanding how currencies are evaluated, how they impact other markets in terms of the correlation between the currency market and the commodities market or the stock market as well, can help us understand where we're at in different market cycles, can help us understand why the market behaves the way it does, can help us understand why commodities are going down and whatnot. Well, one of the things that is in the currency market that you hear me reference from time to time regarding in that Forex report I do every single Monday is basically I talk about news-based events. And I've been getting a couple questions about, well, what is a news-based event? How do we trade these news-based events and whatnot? A news-based event is part of the currency cycle. The currency cycle is probably the most consistent cycle in the world. It's a 24-hour cycle. It's dominated by bank opens, bank closes, and go-to-bed trades and news-based trades. Well, the news-based trade is also what I refer to as the roller coaster trade because it's wicked volatile, has wicked movements on it. It's such a fun trade to trade though. And so when we're looking at an event such as this, first of all, news-based events are around economic conditions. Economic conditions like the unemployment report or the CPI report or the manufacturing report, these types of economic reports that we literally get every single month. Like, for example, we get the preliminary GDP report right now. We get inflationary reports coming out last week. We get retail sales. We get consumer confidence, manufacturing. Every time we have an economic event and we look at these at an economic calendar, they're going to drive the market either up or down. It doesn't mean it's going to drive it up or down. It's going to go one way or the other. So we identify when these economic reports come out, and then what we do is we plan and execute the plan. So what we do here is these are all last month, and all of them are on the euro dollar here. As you can see before the event, what happens is the market literally will go sideways. The reason it will go sideways is because nobody's going to get in front of a major economic report. They're going to wait till the economic report comes out, and then the market will move, pricing in the new information. And typically this is dominated by high frequency traders and algorithm-based trading as well. And so as you can see, once the event comes out, boom, market drives up quite a bit. On a standard lot, which is you're controlling right around $100,000 in total money. You don't put $100,000 in. You would put like $2,000 if you're in the U.S. If you're in the U.K., parts of Canada, and elsewhere, you might have 101 leverage, 201 leverage, so you would put less money in. But on a standard lot, which is a $100,000 investment, you would basically make $10 a pip, 160 pip movements. You'd make $1,600. Here's another one on ECB. The ECB announces their monetary policy policy. As you can see, market goes sideways here. We place an order in above this resistance level right here and an order below this support level right there. So when the market does come out, we just get triggered into the trade. We don't actually go out there and make the trade then. We already have orders out there above resistance, below support. As it does, it breaks out, you get filled here, and then the ECB that drives up 170 pips, that's $1,700. In little over an hour in the trade, once again on a one standard lot, which is $100,000 that in contract value. You don't put $100,000 into it. You might only put $1,000 or $2,000 into it, but it's actually what you can control, and that's the total contract value. Remember, these are highly leveraged tradable instruments. Here you have the unemployment report. Okay, the unemployment report was forecast at 6.1. It came in at 5.9. Once again, we get our orders in below and above support or resistance, and all of a sudden, boom, drives down. And once you see the price, you can see it priced in now. It drives really fast. Now it's priced in. You want to pull the trade off at that point. You're in the trade, once again, a little over an hour on one standard lot. That's 100 pips or $1,000. That's why we love these economic events. They're fast, they're volatile, but you can make a good chunk of change on the actual execution of the trade. Here we have the FOMC policy statement. Once again, as you can see, this goes sideways before the event. After the event, no more sideways. It breaks down hard, continues down, and now we get priced in. That's 110 pips in about 2 hours on that one. That's what we call an economic event. And so in the Forex report, when you see me talking about news-based trades, that's what I'm referring to, these economic reports that we know are coming out, that we want to take advantage of, and so now you have that reference point out there in the market. In looking at the market this week from a currency calendar perspective, you have the BOJ today. They come in at 6:50 p.m. Eastern Standard Time. That is an economic event for the Japanese yen versus the US dollar. If you're looking at the US dollar this week, just looking at kind of that currency, tomorrow you have the preliminary GDP report at 8:30. That is an economic event. That is a news-based event we can trade. You have the consumer confidence report. Once again, that is a news-based trade you can make. And then on Wednesday, we have the durable goods orders at 8:30, and you can make that trade as well. So looking at kind of the economic events I'm planning on trading, and I may or may not trade all of them, but I'm looking at the BOJ tonight at 6:50 p.m. Eastern Standard Time. I'm looking at the GDP, the consumer confidence report tomorrow, and then I'm looking on Wednesday at the core durable goods orders as well as an economic event. Hopefully that helped you understand what I meant by the word economic event or news-based trade. Now you can start kind of putting that into your own process and start tracking these as well. Hopefully you enjoyed this for the Forex Trading 101 series. My name is Matt Justice. I'm coach of Tackle Trading. Visit us at www.tackletrading.com. We got a lot going on out there. Also, the podcast, it's a 5-star rated podcast for a reason, ladies and gentlemen. Go out there, check it out. You can get that podcast on iTunes. You can also get it through different types of podcasting apps on your iPhone or on your Droid system or whatever you can. But if you like it, leave us a review on iTunes. Let the world know how much you appreciate us putting a good word of trading out there to everybody and helping everybody secure their financial future.